Hey everybody, Signet here, and I'm going to go through a little bit of a discussion today about the kind of trading that we want to do. So here I am on the MES, and I'm looking at this and I'm thinking, man, there's really not a lot to trade here, right? So let me try to find a couple of things to trade. Here's the Globex low. We can see that we've crossed through that a couple of times, right? But it is one of the pivot points. We got a little bit of pivot there, and then we got this stuff way up here. That stuff isn't really going to help us out at this time. We've also got this intraday low, and we've got this structure here. That's basically the last body that's down there. Now think about these wicks for a moment. 70% of all of the volume is inside of that body, and all these wicks are just showing that there are buyers willing to step in every time price gets down there. Now, I just seen a bit of news that Nancy Pelosi rejected the stimulus offer from the Republicans, so this might break through the bottom. But other than that news, everything on the chart is showing that price is not going to break through these levels, that there are buyers down here. The time of day does matter, so it's 12:40. I'm in Kansas, so this time is off, right? We're going to use market time. We got market time up here in the upper portion of the screen. It's 12:40 in the afternoon. So we're coming on the outside of lunch, and I'm just gonna jump in here, 3 contracts, take it long, turn on the auto send, flip over to 1 contract, and now I want to start easing out of here. Right? I want to try to start locking in some limits, but I'm also under the impression that I'm not at structure. Right? I just pulled the trigger. What I do have is this Globex level. So we'll go ahead and get that marked on the screen, send it across, show the name on the right. So I've got that Globex level. And then other than that level, all I've got is just some candy down there, right? Just a little bit of, a lot of wick, but no real structure. This line right here is basically representing the last spot where there was some decent volume at 3509. Now what I'm looking at here is trying to split the difference between where I got in and where the low of the day is. So I got in at 3511 and the low is 3506. It's a 5-point range. I'm going to split that into a 50%, right? 3506, I am going to put in an order there. So 3506, we'll go down here and put in a buy order. And then we're going to split that difference. 1, 2.5 points. All right, so it's not exactly perfect, right? I'm just kind of ballparking it. If we were to take a fade, I would be willing to buy in at these levels. Now, what I'm doing is building a position to go long, right? Uh, if you've got a large account and you're willing to sustain the heat, recognizing that this is more than likely going to be the low of the day and that we're just going to build a position here to make our way back up perhaps towards the top of this range, then this would be a good way to do it. Obviously, if I'd have been more patient, I could have tried to take a better entry off of these lower levels, but we have no signals down here, right? There's nothing that I could point to and say, oh, hey, there's my setup. The only pivot we have, which is that Globex low, we broke right through that multiple times. So there's no respect from price on that. We've got the open range breakout way over our head, and price has ran in and out of that multiple times. So we don't have anything there either. We've got absolutely nothing on the chart that we could point to, at least on this time frame. So while we're letting that play out for a moment, let's go look and see if we can find something else, right? Is there anything out here from the higher time frames that we might be able to use? Nothing there. Let's see what we got. Way back here, there was a pivot point, but even that is over our head. This is near our level, right? Right around that 305.7. So I'm going to mark that. Just going to put a line there. It's a little bit of structure. Maybe I got the wrong one. We'll shoot it across. Let's see, right extension on. Just set that as default. We'll drag that down to the right level. All right, so that's the 3507. Now let's go out to the daily and see if there's anything out here that could help us. We can see that level that I marked. It was the close of this day way back here, and there's not much there other than that, right? We got the open of the following day, but it was above it. We're just going to have to leave it at that, right? I could zoom in and perhaps take that high of day, right? I could do that. I'm going to go in just a little deeper, and I'm going to put this actually on the close of that day. That would have more structure to it than where I was at. So what else can we map out from this level? We can go out to the weekly and ask the question, do we have anything here? That's actually the weekly close, not just a daily close. So now I've got a little more respect for that level, right? This whole range here is a major area of resistance. We did break through it, and now we're falling against it. We keep bumping into it, right? It's holding up the market at the moment. One more reason for me to believe that these orders that I have are worth the risk, because this is a very strong level, level, weekly support. It's really trying to hold, and although we haven't really gotten anywhere past it, I'm willing to start building a position here. All right, so let's go back to the daily and start looking at what else do we have. Well, we have formed a cup. This might be a little bit of a handle. Do we have any indicators that we could put on, like the moving average, right? Is there anything like this that we could use? So those are way below us, absolutely worthless, no value there. We don't need them. We could turn them right back off again. What else do we have? We could turn on the daily, right? The daily simple moving average. I'm going to set it, leave it at a 9 for a moment and see what we got. Way below us, right? Absolutely no value. We've ran that far away from the 9-period moving average that it's completely under our feet. All right, so here's a 5-period moving average. And again, way underneath the market. Absolutely no value there. Perhaps there's an exponential daily moving average. All right, so we'll go back out in here and type in daily, and we'll look for one of mine, a daily exponential moving average, and we'll turn off that simple just because we had outrun it so far that there was nothing there that we could use. All right, we'll start that one with a 5, and we'll see where it lands. Got to go to the 5-minute chart. Start to zoom in here. And these orange lines are that 5-period. Right? We're going to change the color of that thing so we can see it a little easier. So there's our 5-period daily exponential moving average. And it is also way under our feet. So what else can we do? We can start looking at the 4-hour instead of the daily, since we've completely outrun it. Now you can see that 5-period exponential moving average is over our head. It's going to be something that we're going to have to struggle to get through. So no value there. Absolutely nothing that we could focus on. Just going to go ahead and turn all of that off and add the combo so that we can get our open range. Okay, so we've got our open range. We can add the high-low close. That's the high-low close for the day, the week, and the month. And now we've got all of those institutional levels, and we still have that Globex level as well, right? So that's it. And you can see that we have none of those institutional levels near our area. The only thing that we had was this Globex level, and we blasted right through that thing. Right? So we have nothing to lean on. There's not a single signal in here that I would trade at this point. I jumped into the market because I believed that we were at a low and I was willing to build a base down here, but I don't see anything down here that would have given me a clear entry signal. Right? I'm going to put a stop there to maybe lock in a little bit of profit in case we do dump. Right? I want to go ahead and capture a little bit of this profit just to maybe just commissions, right? Because no, you know what? No. Now we're going to build the position. We're going to just build the position. We're going to keep working it out. If I forgot I was on the MES. If we were on the ES, that'd have been a different story, right? We'd go ahead and take our $25, lock in a couple ticks. So we've got declining volume, no love there, right? We've got no trade in here other than that Globex. And even that wasn't a trade unless you were just willing to guess the price was actually going to bounce there and put on an order, right? If you were willing to guess and just assume we were going to bounce, you could put an order there. I don't like to guess or to assume that we're going to bounce. So, you know, uh, maybe if I was going to trade that Globex, I would want price to get there and react to it and then take the trade off of that reaction, right? Maybe I'd want to see something with uh, volume coming in to support that we're going to hold. Maybe I'd want to see that trade imbalance on the dome, not this dome, because this dome is a piece of junk. It doesn't show trade imbalance. But on Tradeovate, we have those numbers down at the bottom that show us the resting orders here. And we could look for trade imbalance. We could look for volume. It could be a lot of things that we could use to help us take that trade on that Globex pivot. But if we're just blindly going to close our eyes and put on an order on the dome right at that Globex level and just assume that price is going to bounce there, we're going to get chewed up, right? It's just going to run right through us. There's no promise that price is going to stop at that level. Just because it does it a lot, it doesn't mean it has to do it. So what you could choose to do is you could choose to do it once, right? And then when you get stopped out, you could say, all right, well, it's not the day for that. Let me look for an opportunity to go ahead and look for a trade that doesn't use that resting order, right? So I've got my two orders on the dome. We've locked in a little bit of profit, and so I'm going to look to uh, readjust where I'm willing to build this position. Okay. What I'm looking to do here is think about how much profit I have and how much I believe that we are going to hold this low and start working our way back up. Now, the key here is that I actually have an assumption about where the market's going. My belief is we're going to get back inside of the open range. My belief is that this is the low of the day. Now, I could be wrong and we could break lower, absolutely, especially with that news that came out about the stimulus. But until we do break lower, or until I'm proven to be wrong, I'm going to keep my assumption that we are at the lows of the day and that I could begin looking for long opportunities, right? So what else do we have that I could lean on here? I've got a trend across the tops here, lower. I got these lower highs, right? And it doesn't matter that they don't line up right on my trend line. I'm not drawing that trend line trying to find a trade. I'm drawing that trend line to highlight the price keeps returning to the lows. And look at the lack of wicks across the top there. It's very definitive, very decisive. Down at the bottom, we've got buyers struggling with sellers. There's that give and take of price action. But across the top, there's no buyers stepping in, and it just immediately is rolling over. Right? So where am I going in this trade? 35.16 would be the top of the open. I'm willing to put in a trade there, 35.16.5, and get out of one of my contracts there. I'm also going to go ahead and reduce some risk in this trade. So I don't need to worry about building a position down there anymore because we are above my break even. At this point, I would be willing to just get stopped out, right? I'd be willing to just go ahead and get stopped out on these because I'd be stopped out with profit and I could reevaluate the situation. Remember that I took the trade with no signal, right? I just jumped in at 35.11.25 and I was willing to do the work to build the position down here, but I didn't need to. I took very little heat and it began moving in the right direction. I was able to get a little bit of risk out, and now I'm still long too in a no-lose trade. So there's no reason for me to even try to build that position down here anymore, and I can just let this go by. I've got my overhead target, and it's almost in the middle of where we're at right now, right? If I'm literally at a 50-50. It could go up, it could go down, it could do either one. We are at an inflection point. This is that lower high that we've been seeing. Lower high, lower high, lower high. I want to see this give me that equal high, or I'm going to get a little nervous, right? Maybe instead of both stops there, maybe I put one stop here at the 3, and I put that other one at the 2. So now I could still get kicked out of this trade, but I can't lose any money, right? I'm in a no-lose trade. Obviously, my intention was to take this back up to the top of Globex, but I had no signal when I got in. All I had was a bias that I believed that we could hold these lows for the day and perhaps make our way back up through the open range and maybe up to the top of the open range before lunch ended. But we did set this lower high and the market rolled over here. So now, I want to go ahead and lock in those profits and concern myself with perhaps finding a new trade. Why am I recording this video? Right? What's the point of this? One of the things that I've seen a lot of people discussing lately is how hard it is to trade because our signals fail. The open range Busbies have been falling through. Yesterday, the market just ran and ran and ran like crazy, way beyond anything that it should have done or could have done. And then today it's really choppy. The market keeps walking over our pivot points, and people are just really finding it hard to manage the current market conditions. My perspective has been, well, what are you trying to trade in here? Right? What signal tells you to go long other than the fact that price came down to a pivot point? And at that point of the day, way back here, look at the speed and the strength of that move as it broke through that level and started to dump, right? Price had set this low and it really struggled there for a long time, and then it set a new low and it struggled there. Look at all these tests of that range, and it kept trying and trying and trying to break that range until it finally did. With momentum and strength in the candles, it broke through that level with speed and it just fell towards this pivot point. I don't know about you guys, but I don't want to stand in front of something that's moving that fast. The momentum alone is liable to just knock you over, right? So it doesn't hurt to try. You put the order on the dome, it runs you over. Okay, you've just realized that pivot today is not being respected by the market. The market doesn't care about that pivot. It showed you that. So then where's the next trade? The low? Well, we don't know it's the low, right? It could pull back and drop even lower. So it sets a low and it begins to run away, and we begin asking the question, hey, is that really the low? Is that low going to hold? And the market runs back up, tags the bottom of the open range, and falls all the way back down, running right through these levels. Again, look at the speed of these candles, the depth of these things. And it just ran right through it all the way down. And if you were sitting here waiting for a trade, you didn't get one. It just left you hanging. So I got to ask, what are you trading in here? Right? We can have our bias and say, yeah, I think it's going to hold the low. Yeah, I think we're going to break the high. Yeah, we're going to range today or trend today. You can have the bias. But what's your trade signal? Just the fact that it got to a pivot? Try it once, blindly, sure. But then what? We're going to let this roll on for a moment and maybe go look at another market. Not that I think that we have to trade other markets. You can find a trade somewhere. But let's just see what else we could find, right? So there was a breakout today. It broke out of the top of the open range, and it gave us a Busby. Multiple wicks across the bottom, shot right back up and tagged the top of the Busby. That's all it owed us. That would have been trade on and trade out right there. Beautiful trade. That's the setup. That's the opportunity. I don't really like that it kind of screwed around right there, but that purple line is from the open. So what did price really do here? It broke the top of the open range, and then it tagged the market open. That purple line is where the market opened today. It tagged that held, and it just ranged through there and then exploded up. So there's our trade alert. There's our signal, our entry, and our target. Everything for a fully formed trade with strategy, right? When it broke here and dumped, if we were looking for a Busby to trade the bottom of that range, we got it right there. And the only thing it owes us is back to the pivot, and which it gave us. So two Busbys there, two opportunities, really nice trades. Signals, nice, clean, clear, perfectly formed signals. What else did we have? Well, we had this tag on the bottom of the open range today. Now, it missed. So if you were sitting there saying, oh yeah, we broke out of the open, I'm going to get me a Busby, I got a trade here, and you put your order there, you missed it. But what if you didn't use that? What if you didn't use the bottom of the open range? What if you used a quarter instead? 2075. Would you have gotten a trade? Maybe it would have missed you there too, right? Oh my goodness. Oh my goodness. What do we got there? To the tick. Probably wouldn't have got filled there, right? Probably not with a to the tick move to the quarter there. But if you were looking for that rejection, if you were looking for that Busby opportunity, there it is right there, right? You could have jumped in on that aggressive move to the downside. That thrusting candle is what we call it. So all these different opportunities on this market were clear. The patterns were there, the setups were there, the opportunities were there. And sure, that they can fail, and oh boy, do they fail, right? Absolutely they fail. But at least I'm trading something with a known setup and a known pattern that I've got this idea of what I'm expecting to see. I get the alert and the warning and the setup and the trigger and the entry and the exit. I got everything I need there. Every part of the trade, including how much I should risk. Back here, when we had that open, how much are you willing to risk here? Well, where do I think we're going? I think we're going back up here. Okay. How much is this distance? From 72, just do some easy work, right? From 72 to 52, it's a 20-point move. How much would you risk to make 20 points? Would you risk 4? Yeah, me too. I would risk 4 points. That's a risk 4 to make 20, right? That's a 1 to 5 risk to reward ratio. So if we looked at a 4-point stop, this is 53.5. Our stop would have been at 49.5. Our stop was down here. It was never triggered. Hey, there's a 5 to 1 risk to reward trade with a perfect entry and a very clean target. You know exactly where you're going, right? So guys, I appreciate your time watching this video. Please recognize that we all lose trades. And I'm not suggesting that you can't be an anticipation trader. You can. But the money management has to be there. I've seen people using some real wide stops lately, and using wide stops and averaging down, those are not skilled strategies. Okay, that's hoping I'm eventually right and giving price enough room. Make sure that your stops are appropriate, that they match what you're actually trying to trade. In this example, we would risk 4 to make 20. It's 5 to 1. It's typically what I trade is a 5 to 1 trade. So if you're going to risk 10 points, at least make sure you can get 10 points, right? Get a 1 to 1 trade. Focus on the setups. What does the trade look like? What am I expecting to see? And you don't have to guess or assume that price is going to bounce on a pivot. Go ahead and let it bounce and then take the trade after it bounces. You don't need the absolute bottoms. You don't need the absolute tops. I appreciate your time and I look forward to seeing you at the next video.